Have you been wondering about life insurance, hearing a lot about it, don't understand it, wondering where do you start? Well, you want to check into this video because today we're going to talk about 5 things to consider when you're getting life insurance. Well, let me tell you a little bit more about me. First, that's important. I want to say welcome to my channel. This is Rethinking Money. We're talking about money, and I am the doctor of rethinking, Dr. Roche Brown. I help people to remix their thinking so they can make money, they can manage their money, and they can multiply their money. And I help people, especially know how to multiply their money utilizing life insurance as one of the vehicles in order to do so. So if that is something that you're excited about and you're interested in, please stay for a while, subscribe, like, share, and of course, turn on that notification button so you can get alerted that more information is on its way for you to rethink. Okay? Well, let me tell you what kind of inspired this video. I was recently watching a video by Melanin Money, right? It's for the Black people, Melanin Money. And they were interviewing a life insurance agent, and the title of it said, Blacks Don't Get It. That was the title, Blacks Don't Get It. And in this particular video, they were talking about how Black America is not aware of how to utilize life insurance. And they were saying they just don't get it. And they don't understand maybe even doing some sacrifices in order to get there. And so when I heard that, I was like, whoa, that's big. You say Blacks don't get it. But it made me think for myself, that even if we're Black professionals, we're Black, people who are doing well, a lot of us don't understand life insurance because we weren't exposed into any understanding of life insurance. And I look at myself as a person with a doctorate degree. I'm a licensed clinical psychologist, now financial psychologist, really speaking to the money game. And I realized that I didn't have a lot of understanding around money. It took me billions of years to get a doctorate degree, right? Many, many years. But nobody ever shared with me how to make my money grow, how to manage my money. And so definitely life insurance wasn't a part of that. Now, don't get me wrong. I had a big mama. And those of you guys who know what a big mama is, put a comment in the chat. Say, yes, I had a big mama too, or you had your grandma, or you may have called it your Medea. I don't know what it is. But my grandma was all about life insurance and told everybody to have life insurance, all the grandchildren, the children, all of them had life insurance. So in that way, we understood that life insurance was important in some type of capacity, but none of us knew how much coverage it was. We weren't sure if she was still paying on it. We had no other information around it. And what really brought me into totally understanding and becoming more passionate about life insurance was when I was in my early 30s, somebody introduced the fact that I should get life insurance to me. Now, at this point in my life, I actually owned a home, right? I was doing relatively well in my career at that time. And I didn't understand. So I was like, for what? Especially y'all single ladies that are out there, I had no husband, I had no children, I had no need in my mind for life insurance. Now, there will be a video for the single ladies about why we still need to have it, right? So definitely check that video out when that comes around because it's still very important for the single ladies. But for all of you guys that are watching, you want to understand that it is still very important. Now, what inspired me more about it was when I was actually purchasing a car. So somebody already told me about life insurance. 6 months later, I'm purchasing a car. And in my budget, I knew that I could afford this amount of money. Well, I went ahead, I got into that car dealership, I started negotiating, and I was like, you coming down to my number. Okay, that's what we're gonna do, right? So they came down to my number, everything was working out well. And guess what happened? All of a sudden they told me I needed car insurance. And for some reason, I totally forgot to add that into my budget. But guess what? I already had the car. It's illegal to not have car insurance. So what did I do? I adjusted. I found more money, and that's what we do. We adjust. We either go out and make more money to make something happen, or we redirect money that was going somewhere else and place it into what's necessary. And so that's what I did. And what was so interesting is that now, maybe a month or two from that time period, I'm at an event and I hear this woman say, We get car insurance for our car, we get homeowner insurance for our home, but we won't get life insurance. And I was like, is she talking to who? She must be talking to me. So I was like, she's talking to me. I literally had just said, I can't afford life insurance. I was like, I can't do that. And now a six-figure income, and I was saying I don't know how to afford. We know we can afford what we want to afford, right? But when we don't understand something, we'll say we can't afford it. Is that you? I don't know. But that's definitely sometimes things that I do. And so what I ended up doing is I decided not to get the life insurance, but I got car insurance, and it hit me that my life is more important than my car. And if I can adjust for my car, I can definitely adjust for my life. Right. And so it made me like, really get just, totally into this game and passionate about life insurance once I start to educate myself and get to understand it more. And then I decided I'm going to share with my people because my other Black women professionals also need to hear this information and they need to know what to do with this information. So let's talk about it. 5 things to consider when deciding to get life insurance. Here we go. Number 1. The first thing you want to consider is how much do you need? How much is enough, right? So how much do you need is what we're thinking about. So the way in the industry, we call it the DIME method. It's an acronym, DIME, DIME method. And so what you want to think about is your loved ones, right? And, when we think about the loved ones, we want to say how much debt will be left over to our loved ones. Okay. And I want you guys to pause, take a moment, get a piece of paper out, maybe even your notes in your cell phone. And I want you guys to actually figure it out. So D, how much debt might I leave? Okay. I is your income. And so when we think about income, we want to think about how much do you make per year? And industry standard says at least multiply that by 10. Okay. Now there's some variations to that, but when we kind of talk about it, or talk to an agent, you can learn a little bit more about what it might be the variation on that. But let's say we go with 10. Say you make $100,000 a year, 6-figure earner. We want to multiply that by 10. That means that you need maybe $1 million. Okay. Then after that, we want to look at M, your mortgage, right? So we are looking at not how much your house is worth, but how much mortgage you still need to pay on it. I live in California, so homes are expensive. So let's go ahead and just go with maybe a lower level of that. And let's say 500,000 is your mortgage. So we want to go ahead and add that in. Then E is representative of of college funds. So if you have young children, you intend for them to go to college, you want to have money set aside for that to be able to happen. Let's say you have 2 children, we do 100,000 a piece. Okay. So when we go ahead and add all of those up based on what I just said, maybe we're adding up, 100,000 plus $1 million plus now 500,000 and then now 200,000. So when we look at that, it's like, whoa, it's $1.8 million. That's a lot of money, right? You can see that like that is a lot of money that I'm spending for that, right? So now we're like, 1.8 million. Do I really need that much? Well, you do, based on what we've now covered. You need that much. But we want to go to the next thing, which is number 2, is affordability. How much can we afford? So when it comes down to this life insurance game, I like to really help people understand how much they truly can afford. And this means that they have to look at the numbers, right? You have to look at the numbers. It's the scary part. But as a psychologist, I'm all about let's take a couple of deep breaths. All we're doing is a mindfulness activity. We're not going to judge ourselves. No judgment, no judgment. But we are going to observe and notice how much money is coming into our household, how much is going out, okay? How much is coming in and how much is going out. And we're going to notice what's left over. And we want to look at like, what should we be doing with what is left over? So let's say we notice we have about $1,000 left over. I like to say, hey, at least you can spend about $300 a month. When you look at things, and maybe you guys can agree, we spend $10 every single day on something we don't even remember what it was, right? And we spend it anyway, and we almost waste $10 a day. So why not go ahead and give $10 a day to yourself? That's $300 a month that you'll be giving yourself. And let's say that's what your budget is for the life insurance. Now, this can be different for different people depending on who you are and where you are, okay? But let's go ahead and say it's $300. When we look at that, now we have to look at number three. And number three is the different types of insurance. And so I have a video that goes more in depth on the different types of life insurance, but I want to give you guys a brief overview of that right now. So the one life insurance policy is called the term policy, something that we all may have heard before. Well, a positive of a term policy is that it is inexpensive, okay? But the negative part is that it does expire. So that means it's not going to last forever. It has an expiration date. So then normally they go 10 years, 20 years, 30 years. The highest that I've ever seen in the industry has been 35 years, okay? So we may think about things that are on our dime list that are temporary, okay? So maybe like your mortgage. Most of us get a 30-year mortgage. If all things go well, that means we're only going to spend 30, pay it off within 30 years. That's the goal, right? If we don't refinance. So we can say, hey, that 500,000 can definitely be in a term policy, right? We can look at that. We may look at, our income. Maybe our kids are, our kids are older. Maybe they're like already teenagers. Maybe we're like, oh, maybe we don't need the income to be that high at that point. So maybe you decide I don't need as much of $1 million. Maybe half of that $1 million can be in term. So we kind of look at those things and figure out what are the temporary things. Okay. And then after that, after we understand, what is the temporary things, we now look at the more permanent policies. Now, permanent policies are going to be a little bit more expensive. Not a little. It's going to be more expensive. But with it being more expensive, it actually is going to give you more benefits. For one thing, the most important thing is that it's going to last your whole life, right? We don't have to worry about it expiring. And that means you're going to be able to leave legacy and leave income to your family and your loved ones. You're going to love them to beyond. That's what I like to say, to beyond. You will be loving on them to beyond, okay? And so that will be able to happen for you when you have a permanent policy. But additionally, permanent policies have something called cash value. And cash value is a savings component that rides along your life insurance policy, which is pretty cool to have something that's riding around on your policy, and it can help you understand and help that money grow even more, right? So that's what you want to think about: is what type? Is it a term? How much term do I need? How much of the permanent policy? Now, the permanent policies can be either a whole life or what is called an index universal life, often known as the acronym IUL. So those are like the most common permanent policies. And so you probably want to have a little bit of a mixture in order to hit that $1.8 million goal. Okay. Now let's talk about the fourth thing that you want to think about. So because life insurance has something that is called cash value, so I just mentioned that. Cash value is that savings that's riding along the life insurance policy. You want to think about how much is that monthly premium going to be, okay? And so let's say that monthly premium is $300 that we said. Maybe a portion of it, what happens with that 300 is a portion of it goes to the cash value, while the other part goes into the cost of the insurance, okay? So somebody got to pay for the insurance, right? But then the other part, we want to go into the savings. And we want to know, how is that growing? That's very important. So what is the interest rate and how is that growing? If I decide to get a whole life policy, what is that interest rate going to be? Is it guaranteed or non-guaranteed? When I look at my universal lives, I want to look and see what is the average of what the interest rate normally is. What has been historically, how great has it done, right? So that's considered more non-guaranteed. But historically, has it always done about 6%, 8%? I want to know what that is. So you guys want to actually go and look at that. Maybe call your insurance company, maybe call your insurance agent and ask more questions about that. So you want to understand the cash value, because that's the savings component. Well, the fifth thing that's so important is going to be you guys understanding your goals. So one thing that you're able to do with life insurance, and when I understood this is when I started killing the game and really doing well with my own personal life insurance, is understanding the retirement piece. For those of you guys who are self-employed, small business owners, those of you guys who are not maybe at a job that has really great retirement benefits, you want to make sure that you have this as your supplemental retirement, or maybe your main source of retirement can be used through your life insurance. So what does that mean? That means you have the ability to overfund. So even though $300 is where you are, I like to know, how much is the max that I could put in per year? And then you can start to think about your business goals and say, well, if my max is $8,000 a year, how do I hit that? Right? If my max is $15,000 a year, how do I hit that? Do I have a special program in my business? Do I, for those that are mental health professionals, as I am, I often say, hey, you have that one client that comes consistently. Well, that client is considered your retirement, baby. Right? So you want to go ahead and say, hey, I can put this $600 a month. And so when you decide to add more money on top of your life insurance premium, that $300, you decided, hey, I'm gonna add an extra 300. Well, that whole 300 is going straight into savings, and it's growing with great interest, and it's even compounded on itself, which means it's having money babies. Okay, we love money babies, right? If our money's going to grow, let's get some babies in there. Okay, and so we wanted to have babies and grandchildren, grandbabies, and so we want that money to grow, and so that starts compounding on itself. And even better, when you take the money out, there's no taxes, okay? No taxes. That means what you see is what you can get, okay? So that's what we want to look at. We want to look at, how do I do all of these different things? So I want to understand, how much do I need? I want to think about, is it affordable to me? What is my affordability range when it comes down to it? Do I understand the type of life insurance that I have? So I want to understand the type. And then the fourth thing I want to do, I want to understand cash value. How does that part work? And then the fifth thing that is going to be important to me is I definitely need to understand, how do I overfund it? How do I add more money to take more advantage of this particular thing? If you guys want to learn even more about this information, I want you guys to go to my remixingyourmoney.com. It's going to have information about more advanced understanding of finances. It'll also give you an opportunity to jump on a call with me. I want you to learn a little bit more first. So go ahead and learn it first. Jump on a call with me so we can get to know each other a little bit better, and I can get to know your own individual situation. And if those of you guys who know, like, I know I need a life insurance agent, I want to go ahead and get started right now. I will also have my link below to say workwithdrroche.com. So definitely do that. If you love this information, if you know that it helped you, I want you to like, comment, and share. And please subscribe if you want to hear more information from me as soon as possible. Take care.